Okay, welcome everybody. Today I'm going to do something a little different. I already traded today, so I'm done. I made over 7,000 in profits. I'll show that trade a little later, but I was requested um, by a few people in the room, the Discord, the MBoxWave Discord trading room, to do a video about M auto floor ceiling. And so I'm going to do just that, and I want to show a bunch of examples, kind of run through the various use cases, how I use it, how I see it. I haven't used this indicator much in the last couple of years, just because I had really focused on my order flow setup, but this does tie in very nicely and it's a very effective indicator. I started using it again lately after people got really interested in it again, and so I want to show how this indicator can be used and what additional analysis it can add. So I loaded the last 10 days on the E-mini S&P, and I want to run through how I interpret these lines. So I'm using the default settings, so if anybody wants to know, just the default settings. And I'm going to go, say, from the opening time to, a couple hours, and, see how I interpret these lines. So let's start off right here. Right before the open, we made this floor line. So what do these lines mean? So the red lines are the floor lines, the green are the ceiling lines. In NinjaTrader, I think they're light or blue for the ceiling. Here it's green, but you can change the colors. The floor line means it's heavy volume when price is going down, right? So it's showing different analysis than these numbers here on the swings, and different than these histograms and cum delta and the pace. It's completely different analysis. It's completely different code. So it's an additional point of confluence you can use. So we had heavy volume going down here. This I call a double floor. That's when you have two lines here. And what's interesting here is that this second line formed was above the previous floor, right? So that's when that happens, when a floor is above or a ceiling is below the previous ceiling, it makes a case that, the move is not as strong as it appeared to be, right? Because for prolonged down move, we want more heavy volume as price goes down. And here, the line formed higher than the previous floor. So it makes the sort of case that this is not as strong of a move as it seemed. Here, as we're going up, here it did not form a ceiling line. And what does that mean? It means that it did not find heavy volume as price is going up, which means a lack of interest. Lack of interest at this price point. So failing to create a ceiling line here, price returned to the floor, bounced up, corrected, bounced down, the double floor held, and we went up, right? So how would you trade this? How would I trade this? How do I see it? I would only trade what I see, right? It's got to make sense. If I'm guessing or if I can't read it, I'm not going to trade it. All right. So off the bat, minus 216 to minus 260 supply. So there's a rise in supply here, while the selling is in the histogram, MBox histogram, is decreasing, right? The overall selling in the Q and delta is increasing, but you have to understand how these indicators draw. I'll explain that, because overall there's more selling, but the selling is contracting, right? So it's we've got multiple divergences here. So overall more selling, but the selling is contracting as we're making a lower low, and as we're making a lower low, there's more supply. Okay, and selling is contracting. It's divergence. We get a strong control dot right here, and we bust through that double floor and we make a ceiling. So this is a tradable setup right here. Okay. I mean, we can add other confluences, such as, there's a drop in the pace of the bids, right? That's another point. And this is a very tradable setup. Okay, right here. You trade that, and the next question will be, well, where do you get out? Yeah, this is where well, I'm analyzing this in hindsight, but how I see it is that we went up, we made the 335. Okay, so if I got in here, I'd probably still be in this position. Maybe I would have placed my take profit at at this level, which at this point here we'd be out already. Okay, and if I didn't get out, then I'd notice some other things like the buying contracting here. So overall buying is increasing, but at this higher high, the buying is decreasing. Divergence. Here's another divergence. We had 335 demand, it drops to 106, higher high. Divergence. Less demand, higher high. So even if I didn't get out at this point, I'd consider this and perhaps would flatten the position just from the technical analysis. All right, but where's the best trade in this day here, right? The most obvious is probably going to be here with this X control total offer control here. We had a Stooges because we had decreasing supply 221, 38, 35. So let me go through this setup. We had this. We had the signal Stooges. Look at this. We had prolonged selling exhaustion. Prolonged, going from here to here. It's just prolonged. Also, cumulative delta shows that the selling here is also looks exhausted, right? So by the time we get to this green dot, big offer control dot here, we see that selling is exhausted, right? So at this point, we might not see the most amount of demand yet, but we did in the 128 here. We see some, and we see buying start to pick up. You can get in somewhere around this, here. Probably doesn't have the 10 points of confluence, but it's a tradable setup. Okay, and if you write it out, you can set your take profit to, according to your risk. Or if you hit this and you didn't get out here, you can wait until it hits it again and get out at, those are also logical. Take profit and stops is to put it, where the ceiling or floor line is. All right. So let's move on to the next day, 216. I'm going to be showing the mornings, the opens, after 9:30, what do we see? So here is an interesting day because so 9:30 happened around here. Okay, and we had a total control offer control dot here. All right, and we're stuck in these lines. We're stuck in these floor lines. Okay, and there's just, in this instance, we had all this selling, so we had a lot of volume, as prices going down, and so we drew a bunch of these levels. Now when we scroll back, we see that we are in a tight range here, so these lines are very close to each other. And in that case, it could be harder to read, but that's pre-market hours, and I'm not trading that. What I'm interested in is what's happening right here. So we have 1, 2, 3, 4 floor lines. And if you pay attention, what did I tell you? Here's a higher floor right here. Right here, this line. Okay? So we did not find support below this line. This line played support here. Initially was drawn here, and it held. Meanwhile, we had a higher floor here, which already shows that maybe the move is not as strong anymore. Right, so we have several things going on. Okay, we had a selling dry up here, right? This held, right? This minus 112, and we had this higher floor right here. This line, okay. And, what happens? We get a total offer control dot here. We're not in the plus in the cumulative delta yet, but there are a few things happening here. We got buying here, buying here. We see a 109, okay, which is a change in behavior from this 131. Okay, and a ceiling forms. Okay, the ceiling forms. It holds here support, holds here support, holds here support multiple times. All right. Here we had a basically a double algo buy imbalance plus a pullback. All right, and as we made this 98, we made a higher high. Yes, it's lower than this, but we were coming in with strong buying. And this level held here. Okay, so if you wanted to wait to be safe, here's a good entry right here at the bounce of this ceiling line, because ceiling line formed here. We have a change of behavior. See, it's all going down, and when the ceiling lines started to draw here, the price started to go up. So it signified a change in behavior. Okay, and at the time that after this bar closes up, we already have a switch over to NQ delta. We see this buying here. We had this double algo. We're seeing demand come in. Okay, and the minus 29, we see that supply is diminishing. Right, that's the lowest amount of supply since this down move here for the down waves. Okay, when we get to the minus 56, right, that could be looked at as a effort no result, because there's more supply compared to the minus 29, yet we didn't produce any more selling. It's flat and then it contracts here. All right. Meanwhile, demand has grown 184 and so forth, and then it continues to climb. Okay, and then what these lines also allow you to see is the shortening of the thrust. Right, so the separation between the lines like this and this are wide, and it gets more narrow. I mean, similar. But do you see they're getting more narrow? Okay, and as we come up here, the separation here between this and this is more narrow than these previous separations. So what it means is the move is struggling. And as we're going forward, you see that we enter a range. Okay, and here we get yet another ceiling line that's even more narrower. And here we get a ceiling line that's below the previous ceiling line. Okay, so that's not a good sign for the up move, okay, for this time being. Now here it renewed, yes, but in this time it showed that we were in a range. Okay, so I want to move on. I mean, we can continue with this day. For example, we had a ceiling line here, ceiling line here. Okay, this ceiling line ended up extending and it ended up holding here, and then we broke down through it and formulated a floor here. Okay, so whenever we break the ceilings or the floor lines, that's also something to pay attention to. We formed a double line here, a double floor, and then another floor, and this double floor ended up holding when price returned. Okay, and then price from this double floor went up. All right, let's continue. I know I'm throwing a lot out there. If it's confusing, you can email me. I just want to make sure I cover all the days I have here. So this is 9:30. Here's the open. So here is a good example of the thrust being shortened. We've got this gap. Now it's more narrow. It ends up holding. We have an up thrust. We break down through these 4 ceiling lines. We go down. Here we have a floor. It holds. We went back up, and now we have a ceiling line here, and it holds. All right, so what's the best setup here? I'll give you a few seconds to think about it. The best setup here, the way I see it, would be this here, this double top, because it's very clear. Okay, now this is tradable. You could trade this breakdown. I'm just looking for maximum point of confluence and minimum risk, right? So the thing what we got here is we have 238, 237. That's almost the same. Okay, it is a higher high, slightly less demand, but the big kicker here is this. So it's a drop in buying. Okay, Q and delta starting to waver, and by the time we get to this red dot here, we have the total control of the bids and we cross over here. All right. So let me get this cursor here. All right, yeah. So, you know, we crossed over here, we got the total control, and we see that this held and the buying dropped. Okay, it's a very tradable setup. All right, let's continue. This is Sunday. 220 is let's see here, 9:30. All right, so we opened here, we've got these floor lines here, come up here, it almost touched these, so you know this level held, you know, and we came back down. You know, this is sort of a this, I can see that this was President's Day, right? So it's kind of a more choppy movement. I did not trade this day. I probably wouldn't even consider this because, you know, we've got like less than a 10-point range from here to here. It's just not enough volatility, so let's just skip it. It was a holiday, so holidays, they don't have the volume or volatility. All right, let's look at this example. We had a lot of lines here, okay, and right after the open, we see that all these lines, they basically stopped this move, these floor lines, but they stopped the move up and we broke down. Okay, so what would I be looking at here? Well, the first thing that jumps out to me is going from 38 to 90, because this is like an effort, no results sort of situation. We have more demand, but lower high. Okay, and this ceiling line held. Okay, so by the time you get a control dot, that's a tradable setup. So this is an example of using a floor ceiling line, in this case floor, with an effort, no result, and getting a control dot and, you know, going and getting in a trade from there. Okay, now if you got in here, right, we hit another floor and you're thinking, oh, do I get out? Well, here's a double floor here. It's kind of narrow. I would be thinking, well, maybe I get out at this point. Okay, you know, that'd be the safe thing to do, right? It goes up here and then we get stuck here, but this is the cleanest setup that I see in this day. All right, let's move on to 22. Okay, so 9:30 here. All right, this again, another example where we didn't get a ceiling line because there wasn't, you know, heavy volume on the up move, which means it did not find a level of resistance, and price came back to the level of support. And it broke down a double floor here. Broke down a double floor and it went on for a good move. We had another floor and then went on for a good move. And then it came back up to about this level. All right. So, you know, when we're breaking this double floor and we see that, you know, at this level here, we really did not get demand. Went from 90 to 18. We don't have buying. You know, selling is expanding here and here. You know, you can find a place where to get in. You know, you can get in on the breakdown of this double floor, and we had a total control bid. All right. You can get in on this bounce here, And then, this is another good example here, what really stands out. 296 to 44. Less supply, lower low. Less supply and less selling. So the cumulative delta hadn't switched over yet, but this is really, trading a reversal. I know some people love to try to trade reversals. Sometimes, it's safer to trade when something's already going your direction. You'll have more points of confluence, but you can use these lines to look for reversal. And the thing is, you just got to ask yourself, what's it going to cost? You trade this reversal, you wait until this bar closes up, and if you're going to place the stop at the floor line 93, it's like risk is 2 points right here. So how much does it take to find out 2 points if this is a reversal? We see that supply dropped on a lower low, selling dropped, overall selling here as well. This may, you can say, okay, it's climactic. You can make a case for this reversal, and it'll only take you 2 points to find out if it works or not. Let's go on to 23. Seems like we're having a lot of these bearish days here. That's all right. That's fine. So what do we got here? We had the open 930. We came back to the ceilings that held. We created a new ceiling. Okay, and what do we have again? Okay, demand drops 206.37. Ceiling line holds. Buying drops. Okay, overall buying switches over here. Okay, so if you want to have the safest trade possible, this is trading basically reversal. You're trading the tops. But if you wait until about here, that's a very safe trade because we made a lower ceiling here. So move is running out of steam. The next ceiling is about the same level as this ceiling, so we're not making any upward progress, right? Because it's important when price goes up, it's important that it makes new ceilings. When price goes down, it's important it makes new floors. It shows that there's been progress made. If it's not making higher ceilings or lower floors, then it's a lack of progress, right? The thrust has shortened and the thrust here is already eliminated. Upward, right? We had the lower ceiling and here it's about the same as this. Compared to this, it's a drop. Meanwhile, we had a first floor here. Okay, so we found some heavy volume when price is going down. Right, so this is the safe trade right here. We have 50 demand to -6 supply, so that's a imbalance right here. We do see selling supply. -438 stronger than the 206, right? -110 stronger than the 50 and the 64. Right, you always got to compare to what is relative. And a case can be made that this is initial selling, and here we had a bunch of selling, and we get a control bid here, and you could easily make the case to take a short here. All right, and price comes going down, and the floors catch the move quite nicely here. We draw the first floor here. It breaks down. It tests here as resistance. We break down, 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 down. And what's interesting here, because as we're going down, you see 536, -211, 325, 314, 280, 64. It's like, what's up with that? 64, and you see that the thrust is just lower, is narrower and narrower here. All right. On another thing before going on, we had a triple algo here and we had a triple algo here. Somebody's going to pick up on this. So this triple algo, it didn't work right away, but it did show what was to come, right? So the main thing is to time the entries. If you see the triple algo here, we saw it after this total bid control. It came in later, might not be the best entry, right? You might want to wait until the next total control dot, like here. Okay. And by the time we get to this triple algo, we have, it's like a step. And I've seen this combination before. It doesn't happen all the time, but when you see like initial control, strong control, total control, boom, 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 all consecutively, you know, we have a down move which we can capitalize on. This boom, boom, boom combo. I've never talked about it before, but I have noticed it on occasion. It's initial bid, strong bid, total bid. Boom, boom, boom. All right. This would be the interesting setup right here because it breaks down the double floor with a good amount of control, total control, and everything begins to expand, right? Selling, and here, and we see that they haven't been talking much X space, but it's there, you know, is dominating. And then by the time we get here, 101, 118, 49, right? So it's not so strong anymore. By the time we make a ceiling, we have a clear change in behavior, right? So the floor and ceiling lines in these cases can really help show when there's a change in behavior, you know, and we see that we get stuck in a range here, get stuck in a range between these floor lines, right? And we're not making progress. So let's move on to today's trade. So I got in, so this is where I made over $7,000 in profits. I got in here, so we had another one of those downtrends, and markets opened at 930. We came up here, we tested this previous floor line, right? Had a double algo, up thrust, stooges, and initial control. So I got in right after initial control because it tested, you know, bar came decisively down, rejected this resistance line, which was the floor line, came down, and I got it. So this was a you know, reversal trade. This was, you know, picking the tops and bottoms. It worked out. So what I'm trying to show here is that you can use the floor and ceiling lines to try to find the tops and bottoms, but be careful, you know, because a lot of people get burned finding tops and bottoms, but they do pretty good. You know, you ask, so how much is it going to cost to find out, and you know, how much are you risking, and how much can you potentially make, right? So you can use the lines as breakout trades, you know, break down here. You can, you know, try to find tops and bottoms, but be careful. Make sure that, you know, there's a sound case that you can make for it. And I just I saw that it broke through the double floors. I was happy about that. We reached another floor here. I thought, okay, but I ended up getting out here, and I got out right before this bar jumped up. So in a sense, I got lucky that I exited earlier, but in another sense, I didn't necessarily get lucky because I had my stop above this bar, and I would have gotten out when it returned here. Okay, so wanted to return. I got out around here because I saw a lack of, you know, there's just a lack of selling here, and I had made my goal, so I thought, okay, I'm going to be done. Price went up here, the double floor held as resistance, and we came back down to this previous floor. So these lines can be pretty almost prophetic, like, you know, predicting the future in a sense, you know, and they do work very well. It's a very complex algorithm. It took me a couple years to develop, and it does very nicely, you know, like here it formed the floor and it held 1, 2, 3, 4 times, you know, and by the time we're coming back up, we're seeing that these floors fail to hold. We're going up. We made a ceiling. We have a change in behavior. But the thing that concerns me now is that we're sort of flatlining here, and I'm not seeing good buying here. and I'm seeing a decrease in demand, 285, 167, 41. You know, I'm not seeing a great case for going long yet. Or you could play this as a reversal if somebody really wanted to, But I probably wouldn't enter that trade. Anyway, this is probably just an overview of M auto floor ceiling, and maybe I'll do another video about it, but just wanted to get something out there because I got some people that wanted to know how to interpret these lines. And so hope you guys enjoyed the video, and I'll catch you next time.